Here's a little snippet from an update I gave to subscribers of my newsletter. Crypto is easy. If you like it, please give it a thumbs up. Share it with everybody that you know. It talks about a hodl chart that suggests that the ultimate top of the crypto market might be closer than people think.
And before I start, I want to preface this word here, realized. Anytime you see realized ever in any on-chain metric, especially when it's short term, when it looks at short term, like people basically any cohort from after when the Wall Street ETFs launched, you can expect a skew in data. The short term hodl metrics, all the metrics that calculate realized price for any cohort younger than January 2024 when those ETFs launched, we don't know how much they're off by, but we know that you have to take the absolute values with a grain of salt. Directionally, they probably are still valid, but you can't compare one percentage or a number from today to a previous time frame because because of the way the ETFs buy and sell Bitcoins, it screws up all the metrics, those specific kinds of metrics. Because the ETFs, they can sell or buy any token at any time, any Bitcoin at any time, independent of when their clients buy or sell the funds. The value of these metrics is you get to see the behaviors of people in real time as they exchange Bitcoins. But those Bitcoins that go into the funds are not related to any specific time frame or action. As the Bitcoins move in and out of those funds, they don't necessarily reflect the intent of any person who's buying or selling. And those ETFs, the volume accounts for roughly 20% of the total volume on any given day. So I don't know how that translates into the actual outcome that you see displayed on the screen, right? They're metrics, so they're imputed, they're calculations based on numbers and other things. But you have to expect that you have to fudge a little bit. And the problem will only get worse over time. So we'll assume that the metric catches the general direction of behaviors, but be very cautious anytime you see anybody flashing a chart that compares what's going on today with a historical trend or a previous time frame or anything like that. It's kind of ironic that I say it because I'm going to do that now, but for purpose. So when you look at the realized cap hodl waves, which just takes the amount of Bitcoins that have been held by people over any period of time, and it looks at when they move, well, it imputes, it weights the movement by the price between when the person got it and the person moved it. It's different than the normal hodl waves. The hodl waves just look at the raw numbers. The realized cap hodl waves allow you to see the actual impact of people's behaviors on the market, much in the same way that you don't care about all the people who already have beds when you're running a mattress store, right? You can use that as one input, but then when people come in, they're looking to buy mattresses, so you don't price or set your expectations based on the beds that people already have, which is what you do when you just look at the raw hodl waves. The realized cap hodl waves at least put a weight and let you put it into context of what's going on in the real world. And if you look at the waves for people who bought 1 month ago or less, you can see that we're a little elevated. Not like super extreme, but we're elevated. And it's getting close to this long-term trend line. This is a really bad trend line, but I will give you a chart that shows it a little more clearly. But this is generally the idea, right? It gets lower, gradually lower, 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 and you can draw a line to connect those things. So look, we're going to fudge the numbers. If you follow that trend, we got a plenty of way to go. We got all this space to go. But when you fudge it by 20% or more, we may be a lot closer than you think. Is that a reason to panic? No, it doesn't mean anything. It's a sign of the times, just a sign of the times. But when you turn to the next cohort, which is the 1 to 3 month band, you know what? I got to zoom in here a little bit. So reveal a little. And this band has trended down, right? There's downtrend on the lower numbers and downtrend on the higher numbers and higher values. So this is a clear downtrend, even as the price went up, which means that there's some heavy selling from this cohort. And it could be off by 20% or more in absolute terms, but suffice to say, it's heavy. Directionally, it's significant. So we got to keep that in mind too, right? Last week we saw the miners, we saw the OGs, all these other groups. We'll probably find more in the coming weeks. And these guys, they didn't buy that long ago. This is people who bought 1 to 3 months ago. These are people who bought here, all here, late summer into the fall. And they're already peeling out. So last week we saw the long-term holders, and that has accelerated. That's, you know what? I'll pull that up too.
I hope you liked that snippet. If you want to see the full update, you can get a link in the description below. Relax and enjoy the ride.